Okay, members, we're on to our final 10-minute submission here. Positive Money New Zealand Inc. We've got Don Richards and Cliff Hill joining us. Morning, gentlemen. It's about to rock over to afternoon, but thank you for your patience. And we look forward to hopefully some relatively brief introductory remarks, and so we can have a good exchange. As I said with previous submitters, if you have to cut your remarks short, then please feel free to send them through to the clerk for us to circulate to members.
Certainly. Good afternoon, and thank you for the opportunity to talk to you today. My name is Don Richards, and I'm the National Spokesperson for Positive Money New Zealand. I have with me today Cliff Hall, and Martin Taylor is online remotely. Big banks like to do big deals with big customers. As New Zealand is a nation of small businesses, so must we also become a nation with more small banks. I'd like to start by clearing up a myth that helps explain why we have such a bloated banking system and too much money in the wrong places. Banks do not lend savings. They create new money when they lend. Savings play an indirect role. As the Reserve Bank states, the vast majority of money in circulation is created by commercial banks through the process of bank lending. 98% of our money is created this way, fueled by housing credit. We've actually put the economy on the mortgage. It's time to fix this and get real competition into the banking system and get money where it's needed, into productive investment. So we have 4 recommendations. Our first recommendation is a better balance between private and public sources of money, replacing household debt as the economic driver. As bank issue money, that is, mortgage debt shrinks, government-issued public money can fill the gap. This should include the underutilised form of public money called direct monetary financing to fund infrastructure at affordable levels and boost growth while retaining ownership of the assets here in New Zealand. Another way of injecting money into the economy is by the direct issue of digital money by the Reserve Bank. A retail central bank digital currency can displace more commercial bank money, for example, used for property settlements. So we urge Parliament to support this initiative. Our second recommendation is to encourage more banks, not bigger banks. So following the model for powerhouses like the US, with one bank for every 70,000 people, and Germany with one bank for every 45,000, here we have one bank for every 567,000 people, and small business is the biggest loser. Large banks cherry-pick prosperous areas and close branches elsewhere. We need more local community banks who gather savings and lend locally. They live in the community and work for its success. Now, we can't afford more banks. The profit from just one of the big 4 Aussie banks would support a dozen Kiwi banks or 100 cooperative banks, giving better access to banking, better service, innovation, and competition. Our third recommendation is to break up the big banks to make them safer and, importantly, better regulated for 2 distinct markets, retail and corporate. New, smaller banks will flourish as retail banking adopts a focus on households, small businesses and regions. And corporate banks will be more productive and innovative for industries when their own growth is tied to the productive sector's success. Now, we can achieve separation with ring fencing, as the Bank of England has done, or a bigger structural change, such as the successful breakup of Telecom's retail and wholesale business into Spark and Chorus. Our fourth recommendation is to use KiwiBank to propel the growth of new banking entrants, rather than turning it into the fifth member of the business as usual oligopoly. A banking services hub led by a KiwiBank spin-off could attract new entrants by addressing the practical barriers identified by the Commerce Commission and the technology scale disadvantages that smaller players face. As a bonus, it might seed a fintech industry that becomes our next billion-dollar export. The market transformation could be sped up further by KiwiBank splitting itself into a network of smaller banks vested in regional, iwi, or community public trusts and supported by KiwiBank's Innovation Hub. So thank you.
Thank you, Don.
We're happy to take questions.
Cliff, have you got anything to add? Or would you wait for questions? Okay, we're going to go to Steve Abel from the Greens to start with.
Brilliant. Thank you very much. Can you explain to us what it costs for a bank to create new money? Presumably it costs nothing.
Well, they do have to have money in reserve, but traditionally the banks have a risk-rated approach, and lending to housing is a lower risk than to business. So,
and just to clarify, your graph which shows the increase in private debt and decrease in public debt and how those relate to each other, have we allowed the banks to profit off the back of public needs, i.e. investment in local businesses or their homes, because we've let them have so much leeway to do all the lending? And in fact, wouldn't it be better in the public interest for there to be a lot more public lending and public debt rather than private debt?
yes, exactly. You could have done our presentation for us. Yes, well, the banks are only doing what they can do. And so we do need more effective regulation, not more regulation.
Okay.
Have a supplement? Sorry, just a supplement.
Okay.
Yeah.
Well, we've actually, let's just hold that because we've got a long list here of people that have
Live your dreams.
come
It's all
in.
good.
Deborah Russell.
Oh, nice to see you, Cliff, and Martin on screen, Marcus. I'm just interested in this. You said we don't need another bigger bank. We've heard that from other people, that it would just turn us from having 4 big banks into have 5 big banks. We're better off spreading it out across. But have you given thought as to how we would get those more banks? What's the critical step we need to go to get entities like, the people we've just heard from, and other entities, the various credit unions and the like, so that they can become banks? What's the critical step?
Would you like to answer that, Cliff?
Sure. Like we talked about in our presentation, it's one example is using KiwiBank as a technology hub to remove the barriers for new entrants. There's high hurdles for new entrants to come into the banking sector. If we can use KiwiBank as a technology hub to handle some of those barriers, such as technology, systems, this sort of thing, it's like a franchise model. If you can help set that up, then you'll make it easier for new banks to come in.
One of the things that sort of worries me, with more smaller banks, is we do have to worry about the extent to which they are stable themselves and that they have the capacity to handle reverses and all those sorts of knowledge. I'm not convinced by the 1 in 45,000 people, though obviously there must be some structural differences, not just in the number of players it was Germany that you quoted, wasn't it? Some different historical traditions are different that have led to that.
Remember, no small bank in New Zealand has ever failed.
Yeah, I know,
It's the big
but
ones.
but it's not quite the question. It's just there have been a whole series of historical reasons as to why it's developed that way in Germany, and that particular contingent set of reasons. So we may not be able to get there in New Zealand. It may not be desirable either.
Well, I mean, Germany, you're right, have been with their community banks, their Sparkasse, that's been embedded in the way they do business for generations, for a long time. So we have to learn, because I grew up and I banked with the Canterbury Savings Bank, and that served Canterbury and Marlborough, and the money went back into the community. We did that in the 60s. And bank lending was only 10% of the mortgage market. The banks have now come in, muscled their way through, the community banks are gone. And so we say, let's go back to the future and encourage those savings banks in the regions.
Okay.
Can I add to that? In Germany, the community banks have one rule, they must lend locally.
Okay, thank you. Thank you, Deborah. We're going to go to Dan Bidwell and then we're going to go to Miles Anderson.
Thank you, Mr. Chair. I just want to be clear on the record. So you're suggesting structural change by breaking up the 4 banks into wholesale and retail. Is that correct?
Yes.
And second to that, that's a good idea. Second to that is, I guess you referenced the telecom example in New Zealand. I look at 2 degrees as being that disruptor in that industry. You've said Kiwi Bank will be that disruptor. My question to you is, why does it have to be Kiwi Bank and not a 2 degree equivalent? Is it merely the barriers of entry that we're actually looking at, or what are your justifications for choosing Kiwi Bank?
Want me to answer that?
Yeah.
I don't think it has to be Kiwi Bank. We think there's a real opportunity for Kiwi Bank to play a part because it's already government owned and it could help set up the structure. So no, it doesn't have to be, but there's an opportunity there.
Right. Okay, Miles Anderson.
Yeah, you talk about private money and investment in New Zealand, and currently 85% or of our pension funds, whether it's KiwiSaver or the government fund or whatever, ACC, are offshore investments. How do we encourage that money come back to New Zealand to invest in New Zealand? That's my question
Martin,
for you. Yeah.
do you have an idea on this? Oh, you're muted, Martin. Either that or...
There it is.
So the question was how to encourage savings that have been offshored to come back to New Zealand.
Yes.
I think, the ideal, of course, is to have productive businesses and activity where they can come in. If we were looking at something like a network of regional banks, there's also incentives to be quite targeted with where your money goes if you are bringing it back. For example, if you see a particular region that's got growth potential, one that's perhaps heavily weighted to particular industry, then you've also got opportunities to be a bit more targeted. Right now, any savings really just go into a big vault, centralized vault, and they get distributed according to the whims of large centralized banks. So I think those kind of things would definitely encourage repatriation of some money.
Okay, right. That's it. Okay, let's wind it up because we're over time now. Thank you so much, gentlemen. Thank you, Don Richards, Cliff Hall, and Martin Taylor coming to us from Zoom. Thank you for that interaction. If you've got any other supplementary material, as we've said with others, please submit it through to the clerk's office for our consideration.
Thanks very much.
Thanks for staying engaged. Thanks
Thanks for the
coming
opportunity. Thank you.
in.